Remember, they had cut their target on the Sensex.
One of the key reasons for cutting the Sensex target is the global macro situation. It's less the demonetization. The demonetization is going to have a near to medium term impact. So the real reason for cutting the Sensex target has been the worry over the global macro situation. So as we have been highlighting consistently since July and August, that macro uncertainties are increasing. And we were very concerned that we were reaching the end of the road on global monetary policy. Monetary policies globally, as I have been highlighting consistently, have rather become ineffective. So clearly we are going to see a transition from monetary policy to fiscal policy. Are the global markets prepared for that transition from monetary to fiscal? No. Therefore, the transition is going to be rocky. So therefore, the key reason for cutting the target is the concerns over global macro and the uncertainties that emanate from both President-elect Trump's US dollar and dollar positive policies, US growth positive policies, and of course the Fed turning less hawkish.
What do you see now as the impact of demonetization?
Sectors that are obviously linked to the cash economy, sectors that are reliant on discretionary consumption, those sectors are going to be impacted in the near to medium term. So for example, in consumer discretionary, our analysts have slashed estimates from about 4% to almost 21%. Jewelry companies, for example, have seen a slash of as much as 20 to 21%. Auto companies, we've seen a slash between 4 and 14% to our estimates. And this is more for FY17 and less so for FY18. Real estate, for example, has seen big cuts. Consumer staples has seen relatively lower cuts. And a sector that is standing out is public sector banks, where our banks analyst Manish Karwa has actually raised earnings estimates.
What is the rate cut action you are expecting? What is the fiscal action you're expecting?
We expect, a 25 basis points rate cut in December. Possibly that could be even 50 basis points if RBI wants to be preemptive. From your question about inflation, our FY18 inflation forecast average CPI was about 5%. This demonetization could potentially lead to 50 basis points downside risk to inflation. So if you just do the mathematics that if you have 4.5% average inflation, if you apply 1% odd real interest rate on top of that, you could potentially come down to 5.5% on the repo rate. So possibly, today you are at 625, so you could come down to 550 by mid next year. So I guess bond markets have already priced in that. Bond markets are pricing in almost 50 basis points rate cut.